Welcome back to the Malaysia Money Matters show. It's December 17th, 2024, and we've got a lot to cover today. So let's dive right into some Malaysian company news and global happenings that could have an impact on our market.
Sounds exciting. From potential policy changes to company wins and losses, we've got a full plate.
First up, Bank Negara Malaysia, or BNM as most people know them. They've proposed some changes to personal financing rules, and they could really change how we borrow money.
Absolutely. One that really caught my eye is the proposal to get rid of the Rule of 78 calculation method.
Okay, I've heard of that, but just remind me again, what does that even mean?
Well, basically, it means you'd pay the same amount of interest even if you paid off your loan early.
Ah, right. So if they get rid of it, that'd be a good thing for borrowers, right?
Potentially, yes. It might encourage people to pay off their loans quicker, since they won't be hit with extra interest. But there's more to it. B&M is also thinking about capping certain home loans at 10 years. Things like taking out additional financing on top of your existing home loan.
A 10-year cap. That's a big shift. Could that make it tougher for someone to keep up with their monthly payments?
It's a valid concern for sure. Some people say shorter loan tenures could mean bigger monthly payments, which, might make it harder for people to afford the financing they need. It's a complex issue. There are trade-offs. What we really need to watch is how this impacts borrowing costs and how people react. Will they be more hesitant to take on debt, or will they find other ways to finance things?
That's a good point. It's a balancing act for everyone. Now let's move on to some positive news. Palm oil. Export values for palm oil and related products have been soaring, a 14.4% jump year on year, hitting almost RM 100 billion in the first 11 months of 2024.
That's fantastic news for the industry. A big chunk of that can be attributed to India, which is still our top importer. But the question is, can this growth be sustained?
Yeah, what factors will influence demand going forward?
Well, it really depends on global trends. Things like population growth and changing diets play a part. We also need to consider the growing emphasis on sustainability and environmental concerns. How the industry tackles those pressures will be key to its success.
It's a balancing act, trying to meet the demand but also dealing with environmental concerns.
Exactly. It's a big challenge for the industry, but one they can't ignore. Now, how about we talk about something that's hit a roadblock, the multi-lane free-flow toll system, or MLFF.
Oh, more delays. I thought we'd heard about this ages ago.
I know. The final decision on how to roll out the system has been pushed to January 2025. The big question is, what's causing the holdup?
It's more than just getting the technology in place, right?
Right. There's a lot to consider. Of course, costs are a major factor, but we can't forget about data privacy, jobs at toll booths, and ensuring the technology is reliable and secure. Lots of moving pieces.
It's a big project for sure. Until they sort it all out, it looks like we're stuck with our good old toll booths.
For now, it seems that way. Okay, let's move to healthcare. There's a lot of talk about rising costs and even the possibility of the government stepping in to regulate private healthcare charges.
It's a big deal. I can only imagine how small and medium businesses, what are they called, MSMEs, right? How are they coping with those rising insurance premiums?
It's a huge worry. Rising costs affect the company's bottom line and the benefits they can offer.
Right, and for us, regular people, affordability is everything. We need good quality care without going broke, you know. But what if the government gets involved? Will that impact the quality of private health care?
That's what everyone's debating. Some say regulation could help with affordability, but others argue that too much government control could stifle innovation.
Yeah, that's a hard one. There are good points on both sides.
You're right. The challenge is finding that balance between cost, quality, and innovation. Now, let's shift gears and get into some specific company updates. There's good news and challenges out there.
Okay, let's hear it. Who's doing well and who's struggling?
Let's start with a win for Gamuda. Their Australian subsidiary landed a big contract, RM 1.8 billion to be exact, for a solar farm project. It's a major boost for their global expansion and a sign they're committed to renewable energy.
That's great news. It seems everyone is going green these days.
It's definitely a growing trend. Gamuda seems to be positioning themselves well. Another company on the rise is Supermax. Their shares are at a 3-year high thanks to, believe it or not, their nitrile gloves.
Really? Is the glove industry making a comeback? Didn't they take a hit after the pandemic?
Things are changing. Concerns about supply chains and a push to boost production in some countries have led to renewed demand for companies like Supermax.
Wow, things change quickly in the business world. But not everyone is having a good time, are they?
Unfortunately not. Yinson, a company specializing in floating production, storage, and offloading vessels, FPSOs, are facing a bit of a mixed outlook. Analysts predict good earnings growth, but also warn about possible delays and cost overruns.
So investors need to be cautious.
Exactly. There are always risks, especially in such a volatile market.
Right. And finally, we have a new company on the stock market, Top Vision, an eye specialist center. They debut with a small gain, but they're being careful about potential government regulation on healthcare charges.
It makes sense. The healthcare landscape is evolving, and specialized providers like Top Vision need to be adaptable.
Absolutely. Entering the market now is a bold move. What about the global picture? What's happening out there that could impact us?
Well, there are a few key developments. The incoming Trump administration is planning a big shift on electric vehicles. They're talking about cutting support and diverting funds to national defense.
Wow, that's a big change. How will it affect the global EV market? What about the Malaysian automotive industry? We've been working on EV production.
It's definitely something to watch. It could make it harder for companies trying to enter the EV market and slow down the global switch to electric vehicles.
Interesting. What about China? I heard they're doing things to boost their economy.
They're focusing on consumer spending to try and boost growth. They're planning to give more direct financial help to consumers, which might affect Malaysian exporters.
That could be good news for us. More demand for our products. But which sectors would benefit?
That's the big question. Sectors like agriculture, commodities, and manufactured goods could see more demand from Chinese consumers.
I'll be keeping an eye on them. Finally, what about Indonesia? They're moving forward with a value-added tax hike, despite concerns about the impact on consumers. How will that affect our region?
It's a big step for Indonesia, and it could have effects across Southeast Asia. Higher VAT could reduce spending in Indonesia, which might impact demand for Malaysian goods and services. It could also influence investment in the region.
That could definitely have repercussions for us here in Malaysia.
It highlights how interconnected our economies are. Yeah, it's a good reminder that things can change in one country and it can have a knock-on effect throughout the whole region. But hey, on a more positive note, have you heard about cocoa prices? They've gone through the roof.
Oh no, so does this mean my chocolate's going to get even more expensive?
Well, maybe. This jump in cocoa prices is down to a few things. Harvests in West Africa have been pretty weak, and that's where most of the world's cocoa comes from. Add to that some bad weather, and, well, you've got a classic case of supply and demand problems.
So it's a perfect storm for the cocoa market. But it's not just about the price of chocolate, is it? What are the bigger implications?
Yeah, it goes beyond our sweet tooth. You got to think about the whole confectionery industry, what it means for the cocoa farmers, even the global chocolate supply chain. It's a tricky balance, and these high prices could ripple through the whole industry.
You're right. It makes you think about how everything's connected. From the farms to the factories to our shops, it's all one big web.
Absolutely. Now let's switch gears for a second and talk about something else that's affected by global supply and demand. Shipping. Specifically, the market for those massive cargo ships, the Cape-size vessels.
Okay, what's happening with the giant ships?
Well, it's not all smooth sailing. Rates for Cape-size ships have been going down, and that's usually a sign that global economic activity might be slowing down a bit.
So less demand for things like iron ore and coal, the stuff they usually transport on those huge ships.
Exactly. If big economies like China are importing less, there are suddenly too many ships and prices drop.
Like a domino effect, one thing impacts everything else. What about other types of cargo ships? Are they facing similar issues?
It's mixed, really. The market for slightly smaller ships, Panamax vessels, has been pretty stable in the Atlantic, but it's not looking as good in Asia.
And the even smaller ones, like the Ultramax and Supermax, don't they carry a wider variety of things?
They do. It's a more diverse market, and we're seeing a mix of trends. Some routes are steady, others are declining. Depends on what they're carrying and where they're going.
It seems like shipping is a good barometer for the global economy, lots of uncertainty and a wait-and-see attitude.
You could say that. Now, let's move on to something that always has the potential to shake things up, politics. There are a few things happening internationally that could impact our market here.
Okay, what's the political landscape looking like? Anything we need to pay attention to?
Well, the UK seems to be softening its stance on China. They were going to do a big review of their relationship, but now they're taking a less confrontational approach.
That's interesting. I thought there were concerns about security and reducing their reliance on China.
There were, but it seems the economy is winning out. They see China as a big trading partner, and they don't want to risk that.
It's a reminder that politics and economics are intertwined. Sometimes countries have to make tough choices.
That's for sure. Now, over in Germany, Chancellor Scholz has just lost a no-confidence vote, so there's going to be a snap election in February. And this is happening at a time when their economy isn't doing so well.
A snap election. Wow, that's big news.
Yeah.
What happened?
Well, his coalition government collapsed because they couldn't agree on spending and debt. Now it's up to the voters, and the result of this election could have a big impact on Germany's economic policies and their role in the European Union.
Definitely a situation that could create some uncertainty, especially considering how important Germany is to Europe's economy. Anything else on the political radar?
Well, there's a political crisis brewing in South Korea. Their constitutional court is looking at the impeachment of President Yoon Suk-yeol. It all stems from his controversial decision to declare martial law in response to protests.
Martial law. That's pretty serious. Why did he do that?
He said it was to restore order and stability, but his opponents saw it as an abuse of power, which led to the impeachment. Now it's up to the court to decide if he stays or goes.
So South Korea is facing some serious political turmoil. This could affect their economy and their relations with their neighbors.
Absolutely. Political instability makes everyone nervous, and that can have an impact on investments and economic growth. Speaking of uncertainty, let's talk about cryptocurrency. The rumor mill is buzzing with talk that the incoming Trump administration might create a U.S. Bitcoin strategic reserve.
Wait, a strategic reserve for Bitcoin? That sounds like something out of a movie. What does that even mean?
Well, it's a new idea, but it's gaining some traction. It basically means the U.S. government would hold a large amount of Bitcoin as part of its national assets, just like they hold oil and gold reserves.
But why Bitcoin? What's the strategic value there?
Well, there are a few reasons people are suggesting. One is to counter China's growing influence in the crypto world. It's seen as a way for the U.S. to stay on top in global finance.
So it's another move in the U.S.-China rivalry.
Exactly. Another reason could be to protect against risks with traditional financial systems. Some see Bitcoin as a safe haven asset, a hedge against inflation, or a shaky economy.
Like an insurance policy for the U.S. economy.
You could say that. And of course, we can't forget the potential impact on the value of Bitcoin itself. If the U.S. government starts buying loads of it, the price could go through the roof.
I bet the crypto fans are excited about that. But some say Bitcoin is too volatile and decentralized to be a reliable strategic asset.
True. It's a very speculative asset. Its value can swing wildly, high risk, high reward, and not everyone's convinced it's something a government should be holding.
Definitely something to watch. What about company news? Any updates?
Yeah, Alibaba, the Chinese e-commerce giant, is apparently close to selling its department store business in time to a fashion company called Younger.
Interesting. I thought that deal was done and dusted. What happened?
It looks like they ran into some roadblocks, regulatory hurdles, and pushback from the Singaporean government. These international deals can be tricky.
You're right. Even big companies can face challenges when expanding into new markets. How about Australia? I heard HSBC is in a bit of trouble there.
Yeah, they're facing legal action from the Australian regulator. Apparently, they're accused of not doing enough to protect their customers from scams.
That's a serious allegation. Trust is so important in banking.
It is. And this highlights how important strong security and quick responses to fraud are. Banks have to be proactive about protecting their customers' money.
Agreed. Okay, let's end on a positive note. Malaysia Airlines is getting ready for the Chinese New Year travel rush, right?
They are. They're adding flights and offering special deals to manage the expected increase in travelers.
That's good news to the tourism industry. Hopefully it'll give travelers some more affordable options.
It's a sign that things are picking up, both for the airline industry and the economy as a whole. It's a sign that things are picking up, both for the airline industry and the economy as a whole.
Definitely. Now, back to something we discussed earlier, Bank Negara Malaysia's changes to personal financing. What do you think is the most important change, and how could it affect everyday Malaysians?
I think the potential move away from the Rule of 78 is huge. It could really encourage people to pay off loans faster, knowing they won't be penalized with extra interest.
Makes sense. Could save people money in the long run.
Exactly. It's about giving people more control over their finances.
Yeah.
But we need to see how the proposed cap on home loan tenures plays out.
Yeah, it could help with managing debt, but it might also make it harder for some people to get the financing they need. Lots to consider.
That's right. And that's why it's so important to stay informed and understand what these changes could mean.
Couldn't agree more. And that's what we aim to do here on the Malaysia Money Matters show. We break down these complicated financial topics so you can make sense of it all.
Exactly. So if you want to stay ahead of the curve and get the insights you need to navigate the Malaysian market, be sure to subscribe to the Malaysia Money Matters podcast.
We'll be back with more deep dives into the world of finance everything from company news to global trends and policy changes.
Until then, happy investing.
And remember, knowledge is power. Stay informed, stay engaged, and stay ahead. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.